Hey guys, we're gonna go ahead and start with the concepts, okay? Um, First concept we're gonna go over is market structure, okay? Market structure. It's not an ICT concept, but it's the most important concept that you have to know, guys. If you don't know market structure, you shouldn't be trading, okay? If you don't know market structure, you shouldn't be trading, okay? Market structure is the basis of all trading. It's the basis of all trading. You have to have a good understanding of market structure, or you don't know what's going on in the market, guys. Okay. Um, there's any If I were to pick like the most important concept out of everything in the whole trading space, it's market structure. It's literally everything, guys. And I'm gonna show you why. Okay, and um, I would say I'm gonna try to just make it concise. There's a lot of points about market structure, but I'm gonna make it concise and make it easier to digest. Okay. Okay, guys. Market structure. Okay. Doesn't matter what your trading strategy is, whether if it's ICT, if it's ICC, if it's SMC, if it's Fibonacci, if it's trend lines, does not matter. You're gonna suck and you're gonna be trash if you don't know market structure, okay? So, market structure, key points, okay? Um, Bullish market structure. Up, down, up, down, up, down, up. Okay? This right here, guys, this is a bullish trend. Okay? We're in a bullish trend. Should make this green. Okay? We're in a bullish trend. Yeah? Okay. You have to know certain points in market structure. Okay. Higher high, higher low, higher high, higher low, higher high, higher low, higher high. Okay? That's how you know we're in a bullish structure. Okay? Yeah, you guys get it? And these peaks over here, see that? When price breaks that with displacement, sorry for using another term, displacement is another term for fair value gaps. I know it's so confusing. There's literally 3 terms. I don't know why they do this to us. There's 3 terms or 4 terms for fair value gaps: inefficiencies, imbalance, displacement, fair value gaps. I don't know why they do this to us, but it's there. But they're all the same. So when price breaks this higher high with a fair value gap, or they call it displacement, okay, creates a new high, we're in a bullish trend. And this peak over here becomes our support, or this fair value gap. Y'all see that? Price bounces off this fair value gap or this point of support, because when price breaks this resistance over here, it becomes support. Okay, let me repeat that, very important. When price breaks resistance, it becomes support. Okay, it becomes stronger if there's a displacement or a fair value gap that forms, breaking this higher high, creating a new high, bouncing from this fair value gap. It becomes a stronger support if you have both fair value gap and the support from this peak. From this is called a break of structure, and you get a bounce, and then you create another fair value gap, breaking this high, called another break of structure. Okay, break a structure, break a structure. So higher high, higher low, displacement, break a structure, higher high, higher low, displacement, break a structure, higher high, higher low. That's your uptrend. Okay, very important. So break a structure, break a structure, break a structure, break a structure. Okay, you guys with me so far? All right, let's look at examples in the chart. Let's look at examples. Okay, this is a good example. Here. Price makes a high, makes a low. Sorry. Price makes a high, makes a low, creates a fair value gap. See that? It's a clean break of structure, indicates a bullish momentum. When every time it creates a fair value gap, guys, price, there's a high probability that there's going to be a trend continuation. Okay, high probability there's a trend continuation. Okay, lock that in your heads, guys. Anytime you get a break of structure followed by a displacement over here or a fair value gap, all the same thing. It creates this right here, guys. This right here, this whole thing over here, that creates a very, very strong support. Okay, a very, very strong support. So when price breaks that structure over here with a displacement and a fair value gap over here, it's high chance that whenever price touches that, is gonna bounce back. Okay, it's gonna bounce back. Okay, not all the time that we're gonna get a fair value gap whenever this breaks here, but whenever we do, there's a higher chance that price is gonna bounce back for a trend continuation. Okay, for example, here we broke structure, okay, but we didn't get a fair value gap. You see what I mean? But here, creates a high, creates a low, higher low. See, higher low. It says this low is higher than this low. It's a higher low, and then breaks this structure. This time we get a fair value gap. Boom, and then creates a new high. You guys see that? You guys see that? See, not all the time, guys. Not all the time. This right here. Not all the time it's going to be support. Okay, it's a strong support, but not all the time. It's not 100%. Nothing in this market is 100%. Okay, but if you start to see a sort of reaction there, there's a high, and a candle starts to break again above the fair value gap, there's a chance for a trend continuation. Okay, but you guys see what I mean, though, like with the market structure, right? This is just an example, guys. Higher high, higher low, higher high, higher low, higher high. We don't count that. That's just a random wick. Higher high. Now we get a lower low. Okay. So a lower low. So lower low indicates of a possible trend reversal, but not really. Okay, it's not confirmed yet. But yeah, that's all you gotta know for the bullish trend. That's it. Okay, that's all you gotta know. I hope that simplified it for you. Now let's look at the let's look at when the market reverses, right? Let's look at that. So that was a bullish trend. Okay. Now let's look for reversal in the market. Yeah. So price makes it a higher high. Okay. But you notice this higher high, we're a little bit higher. There's a higher wick. We'll use this as a wick, and then candle closes down, and it closed lower. Boom. It closed lower. Okay. Okay, you guys seeing that? It broke this low. What is that called? There's 3 names. This is where it gets annoying. I don't know why they do this to us. You can call it SMC traders. They call it what do they call it? They call it change of character. ICT traders, we call it market structure shift. ICT traders also call it, other than market structure shift, change in the state of delivery. Okay. Let me repeat. SMC trade, whenever they break a low, right, like that, this low, I call it change in the state of delivery. Okay, you guys seeing this? This is part of my model. This is very important. I call it change in the state of delivery. Other ICT traders call it market structure shift, and SMC traders call it change of character or choch, whatever you guys want to call it. I call it changing the state of delivery, okay? Because that's what it is. It's you're shifting in the state of the market, right? Like they said, there's a difference. They keep saying there's a difference between market structure shift and changing the state of delivery. I personally don't see a difference. Okay, I'm gonna quickly show you the like what they see the difference is, because they're both like indication for a trend reversal. I don't see a difference for market structure shift versus changing the state of delivery. I will show you guys. Literally no difference. Okay, they just indicate. All they indicate, guys, is trend reversals. That's it. That's all they indicate. Okay, this is a good one. So this would be over here. This is what they would call. Just want to check if I'm recording. Yeah, I am. This is what they would call, guys. This is what they would call a change in the state. This is what we call a change in the state of delivery. This is what other ICT calls market structure shift. What's the difference? Absolutely nothing. They both indicate trend. The only difference, guys, is market structure shift is at the wick, and the change in the state of delivery is at the body. There's no massive difference, guys. I actually prefer changing the state of delivery because you get into trades a lot earlier compared to market structure shifts. Because sometimes like the wicks go all the way high and you have to wait for that to break before you get that proper market structure shift. For me, as soon as we get this change in the state on this body, we can enter right away. So I would rather enter here than enter up here. You guys understand? This right here, another name for that, guys, is change of character. Right? That's your choch. Right? That's the same name. They just have multiple names for the same thing, right? That's what annoys me the most in trading. There's so many terms. That's why I'm trying to concise it for you guys to make it easier for you guys to understand, because there's so many terms out there for literally the same thing. Okay. Anyways, back to this. Okay, back to this. So we got to change in the state, okay? And our entry model, right? We enter at the retest of that change in the state before price goes down, okay? That's our trend reversal. And this is where we would be, look for that. Here. This is where we would have our IFVGs. Boom. That's where our IFVG would be, guys. Guess where the liquidity sweep would be? Boom. This would be where our liquidity sweep. Our money sweep. That's where it would be. It's making sense now, guys, right? I hope it's making sense. Okay, so we got to change in the state of delivery. So we got our model for a possible reversal. Wait for a retest and then change into state. Let's say we do get that. Now since we got that change into state, now we have a higher chance for the market to go downwards. Boom. When the market goes downwards, it's going to create a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, and a lower low. I'm going to change this to red so it's there you go. Now we're in a bearish trend. That's our bearish trend. So this is our bullish trend, okay? This is our bearish trend. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. Understand that. And this would be your break of structure. When price breaks this low to create a new low, that's our break of structure. And it's stronger same as the bullish trend if there's a fair value gap here. Okay, there's a fair value gap there, and then there's a point together with a point. It's a stronger resistance zone for the price to go down. Okay, I hope that's making sense. This is really important to know, guys. This is actually crucial for you guys. If you want to succeed in the markets, doesn't matter what strategy you use, you have to know this, guys. You have to study this as hard as you can. This is the most important concept. You have to be able to identify what trend you guys are in, because if you're trading against the trend, you're gonna get cooked. You're gonna get smoked, guys. Promise you. Okay, let me go over. This is the bearish trend. Okay. Bullish trend is a higher high, higher low, break a structure for value gap, higher high, higher low, higher break a structure, higher high, higher low, liquidity sweep, IFVG, change in the state of delivery, retest, enter a trade. Now we're ready for the market to go down, right? Are you guys seeing our entry model? Is that making sense now? Is that making sense? That is our entry model. We are identifying shifts in the market. A shift from bullish to bearish, okay? That bearish shift could be permanent and it could be temporary, right? That's why we have to find proper targets. You guys understand? Okay, so I hope that makes sense.